Hey, thanks for tuning in. This is a weekend review for the week ending November 19th, 2021. We're looking at a chart of the S&P 500. This is the monthly chart. Clear uptrend. Nothing to be concerned about. Weekly chart. Nothing to be concerned about. Ascending channel. Doji. Bullish cross. After losing this bullish divergence, puts in another high, another cross. Zooming into the daily, this is where you do have a slightly different picture, but again, still this ascending channel. The way I view this is we pulled back, and I would expect something like that to happen. Again, what you get is these big thrusts where price moves higher. They then pull back and they keep moving higher as the momentum resets. And then ultimately you get one big clean out run at the end where you kill all the divergences, right? So like this low here maintained a divergence way back here on the daily, but as you saw, it lost it on the weekly. And either way, this momentum divergence that existed here broke right here, and that was your signal. Okay, so like this is where we are, is what I'm trying to point out. So even if this is the end, of this sequence, the one that started back here on October 4th, it still is likely to just do something like that. And then put in one more of these, right? And then come by like middle of January, be up at 500. That's kind of what I see here with SPY. Any dip to the 450s just is a stone cold buy. A stone cold buy. We're going to move over to QQQ. A little bit different view, okay? This one, and I participated a lot back here. I was selling all up in here. I did not add back here, right? I did play all back here. So it's been fun. Like, I enjoy the Qs. They're very, very fun to trade. That being said, I think the fun's coming to an end, right? We had a September low here, and we've gone straight up since. A run now, for 11 months. One pullback here, a pullback here. What you want to start to do when you see these like large pivots, is like connect them in a channel, right? But also put a horizontal line there. So when you come to look at your count, and again, I don't, who knows how the structure of all this is playing out. These overlap. Right, this low here and this high here. This high here and this low here do not overlap. So to me, this is all part of correcting the previous move higher. Right, because she did go 160 to 230, basically 300, and then did this correction. And right here in March, the sentiment, I remember running the psychology check, like the sentiment was extremely low for tech, and she's gone straight up since 100 points, 33% appreciation in 8 months, something like that. But what you have to start to look at is the structure, right? And what you're going to hear me talk about a lot in this video is the cycles of a bull market. And Elliott Wave does a good job of putting that together so that you can kind of see it. Wyckoff did some analysis. Dow Theory talks about it. That idea of like accumulation, markup, distribution, decline. Elliott Wave looks at it like, wave 1, wave 3, wave 5. There's 3 advances in within the context of a bull market. So when I start to draw this one out, I mean, it's hard for me to look at this and say, all right, well, here's, maybe the end of this correction was right here. This is certainly an impulse wave higher, and we're on wave 5. And we're approaching the top of this channel where the risk reward, again, gets really, really bad for a bull. And if you pull this up on the weekly, you start to see a very, very obvious picture, right? So like, it doesn't matter where you draw this bottom channel, right? There or there, I don't really care. What does matter is where you draw the top channel. 1, 2, 3. Now, it's possible, as you'll see, we're going to go look at SMH next, that she does some breakout to the upside. And she just goes parabolic. Do another 100. There's nothing that says that she can't. All right? And all the computers are designed to do the same thing. They're designed to buy what's going up and sell what's going down. That's it. So, why not? That being the case, I'm not a buyer here. Definitely not. I need to see her come back to the 20. She's gone up 12% in a month after capturing the 20 and never back tested. So you see what happens like with a bullish stock? Just keep this in mind. Keep this in the back of your head. A bullish stock captures the 20, never retests. Captures the 40, never retests. Rides EMA 5 and SMA 10 all the way to her destination. All the while, everyone's waiting for a pullback. Oh, wait for the pullback. Well, you had these pullbacks here. This break above retest textbook. But that's not what you get all the time. We gave you one chance to add here. One chance to add here. But really, when you look at this, she rode SMA 10 the whole way. And if you had just taken profit when the 10 broke, you essentially be stopped out here, but you'd add right back. You'd add right back. Right, stopped out. I mean, the point is that it's telling you, for the most part, the short-term trend, the 10. And if you lose the 10, the probabilities increase that you go to the 20 and ultimately the 40 or 50. And where I sit from a trend follower standpoint, and this is just the way that I play the market, is I view weekly 10 and SMA 40 as my lines in the sand for really any trend. And if I'm not above a rising 10 on the weekly, above a rising 40 on the daily, I get extremely cautious about how long I will stay in that trade. If I'm buying below those levels, that's one thing. If we're above those levels and then get below them, it's another. Okay, so moving on. QQQ, awful risk reward to the upside, is basically 0 to negative. So yeah, not really what I can recommend doing. SMH, you're getting a momentum thrust here, something like back here where she just rips. Again, not something that I can recommend buying up here. I'll zoom in and show you what I'm talking about. So, we have this like kind of ascending channel. We also had a top here, and I do this all the time with these corrections. I just use these rectangles to show you a visualization of the measured move, right? Of this move down. When you get above the high of what sparked that correction, that breakout gives you a measured move. Well, we hit that measured move, right? 310 was hit. This ascending channel broke out of that with a breakaway gap or a runaway gap. We've now hit the top of that, one of the extensions here, right? So, you basically have 330, and the downside risk, again, is that you pull back into the 10. The 10's at 276. And the way that I play these stocks is with triple leverage ETFs. So SMH, I'm playing SOXL. So for me, you know, I've recommended sells, and there's no way I can recommend a buy up here. And this type of gap has me very, very concerned. And we don't have an ABC going back 1 month, and the POC is at 250. So like you can tell they're doing that whole markup thing again, but they've already marked it up, you know, to the tune of a 20% decline would still be a very strong buy. And so you can't recommend, you know, buy. All you can do is hold and follow the trend if you're in this trade, i.e. wait for a close below the 10, wait for the 10 to roll over, slope down, that's what rollover means, and you have yourself a short setup. And until then, you can't really add. All you can do is trim into strength to the point where you have 20 to 40% of the position left. And when she loses the 10, you exit the remainder. That's your trailing stop. Like when you bought down here, we had the buy signal back here October 14th. The stop would have been this low. As the trade works, you move up the stop. This is how you lock in your profits and you don't give them all back. If you're not using trailing stops, I can't help you. For me, SMA 10, SMA 20 are the best lines in the sands. Again, it's not perfect, but more often than not, if price gets below SMA 10 and SMA 10 curls down, the likelihood of price going up from that configuration is low. Very, very low. So that's essentially what you're betting on. And here's SMH. So again, awful risk reward. You can't really go buy SMH to start the week. Yet, the same was true at the start of the previous week. All they did was pull down to EMA 5, and then they started buying again. So that same theme with the Qs. When they leave the station, they don't go back to check in. They ride EMA 5 and SMA 10 for weeks and weeks. So we've covered the semiconductor space, which in my view is on wave 5. There's no other way to view this. You know, a very, very nice 1, a very nice 2 with the COVID lows, a long prolonged 3, you know, a very shallow 4, right? Alternation in play here, and now we're into this last final wave 5, which will likely mirror wave 1, which puts this out into July, right? So any dips at all in SMH are buying, likely until July, or you hit 430. All my upward profit targets were hit. Doesn't matter. The momentum is back, and you can see it here on the histogram, and you can see it on the weekly PPO. So as long as that momentum is here, you hop on board. That's how it works. And when the momentum leaves, i.e. the 10, the 5, the 20 all flip, roll over, then you get off and you protect. You get out of the trade. You don't leave anything in it. You get out of the trade. So all of those charts, right? And then this one doesn't make any sense to me. There's clearly something going on in the markets right now with breadth in particular. So this index represents basically the worst stocks in the market. And when the worst stocks are going up, you can tell the sentiment for risk is high or is on. And when all of them are going down, the sentiment for risk is off. And what I just showed you with the Qs, with SMH, with SPY is basically 30 days straight up. Not a single ABC on the chart. Trend is up on all time frames. Not as true for IWM. IWM, there's no other way to look at this. We'll get rid of all of that here. We don't need to spoil the look. There's no other way to look at it at this point than a failed breakout, We have increasing bear volume as we're going lower, closed at the low on the week on increasing volume. The breakout itself is supposed to have the increasing volume, not the pullback. Red flag number one, right? Closing below 234.53 on increasing volume. That's red flag number one. Red flag number two, closed below the yellow line. Red flag number three, closed below the 20 on the daily. 2 sessions in a row. Closed below the bull volume candle, the quote-unquote breakout candle. Closed below the low of that candle. 2 candles, 1 candle, sorry. And this is telling me that the buyers have lost it. The demand for this security is done. Doesn't exist. And when you really start to zoom out, you get a very, very scary picture. Very scary picture. Again, you can't leave the context out, right? You've got to look at all of this stuff within context. So that same run that you saw in SMH and QQQ and SPY going back to way back here, 2016, right? This, to me, is starting to look like a complete 5-wave move. Again, 1, 2, 3, 4. We're in 5. However you want to count it. It sure as hell doesn't look like, NVIDIA's wave 5. 1, 2, 3, 4, 5. Certainly doesn't look like SMH's wave 5. Doesn't look like the Q's wave 5. Straight up from those October lows. Here's IWM October lows. We're basically falling right back to them. I mean, literally within 4%. All the other indexes are 15 to 20% higher from the October lows. And when you look at this in the context of the monthly chart, it gets even worse. Well, what type of candle are we forming here? That's not a good look. Again, this doji with all the volume, and the minute you get above, you instantly find more sellers. You look at the daily. They shut off the buying 2 weeks ago. They haven't bought this ETF literally since the 3rd. The sellers came in on the 4th. They propped it up one more day on the 5th. All this after hours bullshit. The quote-unquote markup so that they can what? Distribute it back. Okay. There's no doubt they've accumulated. There's no doubt they marked it up. But why is it that the markup process ended that fast? Why are they back to distribution? Why is it that there's no trend? When you have this brand new bull market look, I mean, just take away price. Just look at these moving averages. Right? The distance at this point here, back when this rally started in October, the same time that all those other markets rallied, all those other markets are putting in what I call blow-off tops. Those are very euphoric moves. What you're seeing in SMH, SPY, QQQ is straight up for 35, 40 days to the tune of 20%. This is not what you have in IWM, which is the risk-on indicator. So there's a red flag. And I'm sure if you were to look at the McClellan oscillators or any of these advanced decline metrics, you're going to see a huge divergence taking place with the crap stocks and the stocks that everyone's been bidding up for 2 years. And quite frankly, you can go back. This has been going on since 2016. So my perspective is very simple. Late stage bull market activity. 1, 2, 3, 4. No matter how you count it, it's on wave 5. Same thing with SPY. 1, 2, 3, 4. No matter how you count it, wave 5. SMH, wave 5. 1, 2, 3, 4, 5. All this stuff has the potential to retrace back to the 2018 lows. Certainly that whole move. So you would put in this fib going back here, and you'd look for a 50% retrace, something back to $200 on SMH. And that would again take a very long period of time, something like this. You know, ended up taking almost a year. But that's how you get back down. That's how you reset these charts. Because this trend, in my opinion, while it can continue, right? It can continue up here at 400. It can go until June. When it ends, this is what you're getting. So I'm not sounding the alarm today. I'm saying we are way closer to the end than we are the beginning. Way closer. And if you keep that context and you zoom in to what happens in every single bull market in the end, they sell off all the crap first. Well, that started back in March. We're below the point where they started selling. Again, that's evidence that they've distributed their shares and that the markup process has ended. Okay, late stage bull market stuff. When you look at what is the possible bull case for IWM, there's only one. There's only one bull case left. All right. No matter how you draw this, it's obvious to everyone if you just connect the highs that we broke out back here. And here is the breakout area. 231, 232, 230.69. This high, 230.72. 229.84. That whole area. This is why it's subjective, not objective. This whole area is considered the breakout area. And really, it can stretch all the way back here and create this big band or zone. 234.50 to 229.50. A 1 to 2% zone. Well, we now have fallen into that zone, closed inside that zone. This increases the probability that you're going to slice right through that zone. So the only case that the bulls have left is that this is a zigzag that's going to complete at the 1, 2, 3, 6 extension of wave AB. That's it. That's the last thing the bulls can hang their hat on. And the way I view these types of patterns is simple question. What differentiates it from something like this? And it's a real simple answer. When price gets back past the 1, 2, 3, 6 extension of either wave 1, 2 or wave AB, we now have an impulse wave. And you look for something like this. And if you have an impulse wave, this is a 5-wave move down. This is changing, in my opinion, the structure of these charts. Now, that's the lower probability event. We're still above the 1.0 extension at 232.61. So again, the bulls still kind of have the ball if you give them the benefit of the doubt. But when you look at the weekly chart, this is a failed breakout on increasing bear volume. This is a look above and fail. And so, the momentum on the daily chart is of concern, right? We've basically accelerated lower since the 9th. We got no bid at the 10. right? With this PPO configuration, right? This, you're above all these here. Blue's way extended above the red. When you have that configuration and you pull back in to the 10 after printing a brand new all-time high, the high probability bet is you come back in and print a new all-time high. She did not. Same is true for the 20. Brand new all-time high. At this point, had pulled back for 8 bars straight. Right into the 618 extension of wave AB. No bid. This is the trap door. They opened the trap door. So there's something going on in the market right now, and I hope everyone's paying attention. It's not the same market. I'm telling you right now, it's late stage bull market stuff. This is not the time to think we're in a wave 2 or that the risk is heavily skewed to the bull side. It's not. Everyone says melt up. No one is believing that the market could possibly top soon. It's going to top soon. And the VIX continues to put in bullish momentum divergences. Now, this can happen for years before it actually leads to an explosion higher. So I'm not too concerned. But what I will say is that there's a gap up here at 21. The psychological 20 is a very big deal. And there now appears to be a floor at basically 15, 16 bucks. And again, this floor has been going back to April. So I'm definitely concerned. This looks like accumulation down here, like they do down here before they pop it. Come down, they go sideways for a long time, and then pop. And I mean, that's kind of what you see here. And again, I'll buy anything down here. Come break this low, I'm happy to buy the VIX. Break 1410, come all the way down to 13s. I'm happy to buy the VIX. I might not get what I want. Again, I missed this run here in the VIX because I was waiting for 13s. So it's just one of those things that you have to hedge your portfolio the closer you get to cheaper insurance. And when insurance is really expensive, you say, I don't need that insurance anymore, and you sell it, keeping the long bias. Let's take a look at a few more charts. Obviously, Bitcoin is a great one. I think this is, the best, measurement of risk on or risk off or sentiment in the market. And what we do have here is a big cup and possibly a handle above a rising weekly 10. As long as she stays above this orange line, no problems. Still in this long-term weekly ascending channel pattern. Now in a daily ascending channel pattern. I do see this as an expanded ABC. I called this one out kind of in real time. And really what we wanted to do for this sequence that kind of started back here in October when the PPO rolled is we wanted to see how price would react when the PPO got back to the zero line. And what you found is that as PPO got to the zero line, it was also breaking below this key low and recapturing it in that look below and fail configuration. So this is kind of the setup that I see now. And again, it's really all about this IWM thing. If IWM is faking out here, and this isn't really a bull setup, then she's likely going to drag all of the markets lower. SMH could pull back, Qs could pull back, SPY could pull back, and there'd be nothing wrong. The same would be true with Bitcoin. Bitcoin can keep pulling back. Ideally, she holds above this high here at 52,888, which would ensure that this sequence higher is still in motion. Okay. And right now it is. So, you know, you can certainly look at something like this and just a real shallow 5. Certainly possible. And that's kind of the configuration that I see for now. If she breaks this 5288 level, again, what you're also doing is breaking out of the ascending channel. So it's going to be a challenge for them, for the bulls. If they get below 5288, even though they're falling back to the 200, they've already been at the 200. They don't want to come back down and get below this channel. They want to stay in this channel. This channel is how they get to the prize way up here, sometime in end of year, beginning of new year. So Bitcoin is still long. The daily chart here is short, right? The trend is down on the daily time frame. And until they get above this yellow and orange line, ultimately back above 61, 62, the short-term trend is down. The weekly 10 is catching a bid. The weekly trend, the monthly trends are prevailing and pushing price higher, but it's just something to keep note on. We're going to pull up GDX to look at gold. We do have this perfect little test here of the inverse head and shoulders breakout. Again, filling this gap at 33.32, tagging SMA 20. You know, this is all very bullish to me, right? Get below 33.22, and to me, the structure of this entire thing changes, and it's not the same setup anymore. But for now, I'm still long GDX. I still will be buying. I don't like the weekly look of closing back below the 40. She captured it for 1 week, then closed back below. That's a trap. Not a good look. What you want to see, if this was truly the time, is a capture of the 40 and acceleration through the 40. And that is not what we have. You don't have that in silver either. So all of these things are kind of telling me, you know, it's possible that inflation is done. I look at the stocks that I've been watching, you know, gap fills to sell. All this stuff was called out. And then we end up getting all the sell signals on this chart. This is oil. Same thing with Exxon. Right, so this inflation trade looks dead to me. And I kind of was calling this out up here. Hey, this is the D. Look out. Everyone's way too bullish. We're going to be pulling back to the E, and this is where you want to buy. We're just not there yet. It's probably sometime in the winter, but just keep an eye out, i.e. for that 57, 59 and below, but also closing below the 40 and the 20 on the weekly will accelerate price lower. There's a gap down here at 50.22. So those are the general areas where I would look to find a bid. As price comes into this gap, bulls will do something. And if it's something like this, you know, then, sorry, that was awful. If it's something like that, then it's exactly what we want, right? All these three-wave moves in an expanding triangle formation, we call it a broadening formation. That's the buy setup. And the same problems here with URA, right? So this whole inflation trade, when everyone's talking about it, it's over, right? It's done. And here you go. This is done. It's dead. Right? The first time up here, everyone was talking about it. Second time up here, everyone was talking about it. Third time up here, the Fed capitulated and said, yes, we believe inflation's here to stay. And boom, magically, she closed below the 40, just like that. Funny how that works. But the point I'm trying to make is the commodity sector, which has been providing lots and lots of opportunity for Q3, Q4, looks dead. SMH, QQQ, risk reward is negative for bulls. SPY certainly has a lot of upside left. IWM, fake out. So is IWM telling everyone that we're risk off, or are we actually finally going to see rotation out of SMH and QQQ and into small caps to carry SPY higher? Again, SPY is still in the configuration of buy the dip. There is no problem buying SPY at open. And the closer she gets to 455, 460, the better. So I hope this helps. I know this video is a little bit long this week, but I had a lot to talk about, and I really just covered the indexes. That's it. And until we get clarity with IWM, I'd be very cautious with how much risk you have in this market. Hope you enjoyed the video. If you like the content, hit the like button, subscribe. Check us out on Twitter at MarketWizard87. Thanks.